If you've seen the headlines, you saw the GDP numbers, you know that we technically, by definition, the definition that didn't just get changed last week by the president, we are in a recession. It's official. The data shows that we have just entered a recession. So investors out there are probably wondering and nervous, thinking, should we sell our stocks? Should we stop investing? What should we do? I'm going to tell you exactly what I'm doing and why this is probably the time to be buying stocks. GDP fell 0.9% in the second quarter, second straight decline, and a strong recession signal. So this definition of recession that I'm talking about is 2 consecutive quarters of GDP decline. It happened last quarter, it has happened this quarter. What's crazy, or might seem crazy, is that the stock market is up today. Every single major index is up. The Dow, the S&P, the NASDAQ, the Russell 2K, and the VIX, the volatility index, is down. In our minds, we're thinking that should not be the case. We just figured out we're in a recession. The stock should be down. Why isn't it? The stock market acts ahead of this data. The recession data is trailing. We've seen the Fed raising interest rates. The Fed has raised interest rates to curb enthusiasm, to slow down spending. That purposefully starts a recession because you have to slow down the economy to get inflation under control. And one of the tools the Fed can do that with is raising interest rates, making it more expensive to borrow money, which disincentivizes in making purchases. That's bad over the short term, but it is a natural part of any functioning, healthy economy. Interest rate hikes happen. Recessions happen. And as painful as the past year and a half or 2 years has been, this is a good thing for the long term and for our economy and for good companies long term. So let's look at the data, right? What does the data show? This is an article on Forbes. How do stocks perform around recessions? On average, stocks perform worse 1 year before a recession than during a recession. In the 2 years following a recession, price returns were positive 82% of the time. In the 2 years following a recession, price returns were positive. And this chart goes into it, but that's the headline. That's the historical data that we need to look at. The headlines are going to be scary right now, but if we look at history, this is when we should be excited to invest. And I'm going to continue investing. I'm not making any sales in my portfolio. As long as I have income and I'm able to invest, I am going to keep investing. We've got some big earnings reports today. We've got Apple and Amazon reporting earnings. I'm going to cover both of those in videos today. So make sure to like this video, subscribe to the channel so you never miss an update.